UPB on this Tuesday, October 27, 2015, after the closing bell. We got Apple reporting earnings. Look at its spike here to session highs. And if you look, they're a cash hoard big enough to solve the world hunger crisis and still have billions left over to buy back their stock as they've been doing the last couple of years. Apple, though, from a long-term perspective, I'm telling you, looks very bearish to me, this topping pattern. And here we are. We're still not spiking up. Have we negated this right shoulder here and popped to, say, 125, 130? Yeah. That would put the pullback out of the equation, something in the likes that we've seen back in September of 2012. That type of pullback I'm looking for here, under $100 a share. This earnings report's going to obviously elongate this shoulder a little bit, but I still think it's going to head to the downside. Speaking of heading to the downside, Twitter, a stock that I thought would ramp up to the upside post-earnings. Well, it's starting to do it off its lows here after it broke through 28, getting a little bit of a bounce, but it's been a nasty decline, over 10%. Options market was anticipating a 10% move to the downside or the upside. And you can see here a little bit of a longer term chart. The only saving grace here is that Twitter ramped out of the gate on Monday, not affording the possibility of getting into some cheaper calls. So that was a good thing. But Apple, I did get into some 110 puts earlier today, and those are not looking so good right now as it stands. But we'll see if we can continued weakness. We were down at about 115 just a little bit ago. So we'll see. It's early on. Still got the conference call. And, overnight to digest the numbers. At least it didn't gap up 5% anybody in the puts. And again, if you look from the record high here, a nice flagging pattern. Again, we're not up to 118, 119. We didn't even break 120. And I talked about this. See how we go across to this 119 level. It's the highs that we saw back last December. See that? We came right up to it, gave it a kiss, pulling back. So I'm looking for Apple still, despite this earnings report, to head to the downside. Another head to the downside. XLE Energy continues to roll over. Everybody thought this was the bottom here, and sure enough, we had a nice rally. Looked like a nice bull flag here, but no, we're breaking down. We're going to continue to the downside. I brought this chart up this morning. Crude oil diverging from the stock market, rolling over, and I think equities at some point are going to come to meet up as they did when crude oil started to bounce. But equities keep going. The NASDAQ, for one, continues to peg highs here, almost up to the all-time record high here on the QQQ. A little less than $1 away. Unbelievable move. So let's look at the S&P 500. Again, trying to reclaim up to its record highs that we saw back earlier in the summer. And again, with the crash that we had back in August, you could just erase that. It didn't even happen. We've had pullbacks like this before. Going back to 2011, the debt downgrade, that started in the start of August, did not recover until November, and then we had a really nice rally. Is that the kind of move we're seeing here? And look, it's already started. Very similar candle there before we really started taking off. We had three really nice moves to the upside off that candle, and same here. We have three candles to the upside. And then we had a little bit of an indecisive candle. Is that where we are now? We're going to have a nice little wick here and indecision. Maybe a little bit of a pullback. And then December will set the market poised to hit new record highs if this pattern does indeed hold true for 2015. Now, certainly history does not always repeat itself, but it's worth noting previous action back in 2011 did lead to record highs here for the market. Let's look at one more thing before we get going here. The VIX, which continues to melt lower. And, even today, you can see the move it had to start the trading session. And guess where we closed? Just about at session lows. I talked about this in yesterday's video. The breakout and the breakdown that we had end of last week. We had this breakout and this breakdown. But overall, the trend remains a melt to the downside. We do have earnings reports after the bell tomorrow. GoPro, I'm in some calls there. To me, it looks like it's petering out here. The selling pressure is laying off, despite down almost 2% today. Another stock seeing massive short interest from the 65 level, more than doubled. So I'm looking for a move to the upside. I'm in the 31 and 31.50 calls. Also, we have later this week Starbucks reporting earnings. The trend firmly entrenched to the upside, even down 1%. I think there's a good chance it's going to continue to the upside. And LinkedIn, which is over the $200 figure. You can look at this pattern here. You can draw a trend line. Support rest here at about the 180 level. Resistance is just about where we are now. So it's going to be a very decisive earnings report, chart perspective wise, to send us back up maybe to the 270 level. or are we going to break down through support and head down to the long-term trend line support here at about the 150 level? All right, UPBOptionMillionaires.com. One last look at the Apple. The apple of my eye, no, I am in the puts for a move to the downside. It's not happening, although we're pulling back from the highs at 118. I need this to go another $5 or $6 by the end of the week. And, anything is possible here. We have Twitter also was bouncing off its lows. There it is, back over 28. Now, if you could just get back up to 31.50 and just call it a day to screw basically anybody who bought out of the money options, both put and call buyers alike. All right, I'll see you in the chat room at OptionMillionaires.com. Everyone have a good night.